Hi folks, this is Sean Hyman from MyWealth.com, and I just want to talk to you about today's topic, which is China is at it again, and they are buying up stuff with a fury that is going to unleash inflation, and is going to also have a huge impact on the dollar, and is already causing it to fall, among other attributes, but they're being a huge contributor here, and I want to talk to you about the topic today, so let's go ahead and get started.
Be sure to check out the written blog at www.mywealth.com/blog. I want to talk to you today about the dollar falling as China buys up commodities, and why the euro and the Aussie dollar are going to be the beneficiaries of this. On May 18th, Royal Bank of Canada declares China is stockpiling commodities as part of a reallocation of its wealth amid concerns that its dollar assets may decline. Now, I want to talk to you about why I really believe them. I don't just take people's comments lightly or blindly trust them, but when these stark comments come up, I do further research it to see if my analysis agrees with theirs. So going on recently, China voiced its concern over its dollar-denominated assets, mainly its U.S. treasuries. They went on to propose a new global currency to reduce reliance on the dollar. That's probably nothing more than a pipe dream at this point, so while they would love that to happen, here's what they're doing instead. Last month alone, they bought up to 57 million metric tons of iron ore, over 399,000 metric tons of copper, also increasing their purchases of oil by over 14% last month. They're really stepping up their purchases of commodities big time. That's the point here. And that's to help offset a falling dollar, because as the dollar falls, almost nothing benefits better than commodities. So this is a way they're essentially hedging their bets, so to speak. So here's why I agree with China's fears. Take a look at the following charts. Oil starts its ascent in March, and the dollar starts to fall in May. So there's a lot that's happened in the last few months between March and May, and you'll see the dollar there on the bar graph. That's in black to the right. I'm pointing out there, and as it's falling through its uptrend line, which is the red boxed area, and I'm pointing the arrow down because I really believe that's where the dollar's headed from here. It's failed to make new highs, and actually somewhere around the area where I've actually pointed to is where Obama talked about how strong our dollar was too. So he's probably not the best currency analyst in the world. He's done a little better in stocks than he has currencies, we'll say that. And back even in February going into March, oil, which is the bottom squiggly red line there, has performed even better, and you see that accentuated by the green arrow. And so, you know, what does this mean for you? It means gas prices are going to be going up because oil prices are going up. And so a lot of people say, well, you know, okay, the dollar's falling, so what? I'm not a currency investor, or I don't trade currencies. I don't really feel the heat from the fall of the dollar. I've still got dollar bills in my wallet, and it hasn't seemed to affect me. Well, it does affect you, and you'll notice as you see the price of oil go up at the pump, the price of oil go up, the price gold rather, price of commodities in general. Gold that's used in different products, copper that's used in different products, things of that sort. So the cost of our goods is going up as our dollars are eroding. So whether you are a currency investor or not, this is what in reality is happening, and there's ways that you can take advantage of it, which I'm going to show you here later. But look at this, the CRB index, and for those of you who don't know what that is, it's a basket of commodities that's tracked really to track inflation and to track the cost of goods that consumers are having to bear. And that's the top chart there. You'll notice it broke its red downtrend line recently, broke above its yellow sideways resistance as well. So we've got a breakout there. What does that mean? That means when you go to the grocery store, things are going to be higher. Wheat's going to be higher. Sugar's going to be higher. Corn's going to be higher. Soybeans are going to be higher, etc. But this even goes over into things like lumber for home building. I mean, just so many facets of our society the CRB index tracks. So you got to break out there. The middle chart is the U.S. dollar index. Again, it's breaking down, which we saw in the last chart. Oil we saw in the last chart as well is breaking higher, as shown by the green supportive uptrend line, and finally gold there on the bottom. Has broken the downward red trend and has started up higher again, above 900 now, headed for 1,000. Oil is at almost 62 today. as of this, and so we're getting some pretty sharp moves today alone. But these are trends that are going to last for months on into possibly years, and so people need to prepare now. Now, speaking of preparation, how can you do that? Well, in currency land, the way that you can do that is to own the euro and own the Aussie dollar. Why? The euro is called the anti-dollar, and it's the first place that money really tends to flow once money flows out of the dollar. Why is that? Well, it's your next biggest economy, and there's tons of trade that goes on there, but even more importantly, it's also the next most liquid currency outside the U.S. dollar. So when these big hedge funds and banks start moving out of the dollar, one of the first places they'll place money is into the euro. So the euro dollar, EUR/USD, is a good beneficiary. So buying that currency pair can help a ton, and that's shown by that red line that I have pointed out there. And you'll notice it broke its red downtrend line, held its sideways range as shown by the black lines, and then recently has even broken above that in latter April, early May. And then the Aussie dollar. Why the Aussie dollar? Because Australia, they're huge exporters of commodities, particularly things like gold, copper, things like that. And so, they mine these things out of the ground at a certain fixed price, but as the price, the value goes up, they're able to fetch more and get more of a price, a higher price, and so that widens their profit margins more and more and more. And so as they increase profits, of course, it increases the sentiment, increases their the well-being of their country, and so for many of those reasons like that, the Aussie dollar also it gets supported and picks up as well because it benefits from all of these dynamics. And you'll see that by the black bar chart there, and it's broken even higher and is leapt even ahead of the euro. So the Aussie dollar AUD/USD is the other currency pair that you can buy to hedge against inflation, hedge against these rising costs that you're seeing, and to hedge against a falling dollar. This applies to you, and you can profit from it whether you're a U.S. citizen or whether you're hearing me from around the world. Doesn't matter. These are dynamics that you can profit from no matter what the case. But it really is going to hit the U.S. citizens very hard in their pocketbooks on a personal level, and so it's very imperative that they do something about it. And this is some actions that you can take. Next slide shows how you can get enrolled in our courses, because a lot of people go, well, I believe in all that, I see all that, but I don't understand what the heck the currency market's all about. That's where you get enrolled in one of our currency courses. You can do that for $20, and you can click on the the course tab at www.mywealth.com, as I've got highlighted there. If you've got more questions, you can call us at 866-257-9677. That's 866-257-9677, and you can reach us there, or you can email us at sales@mywealth.com. But whatever you do, don't wait. Get in a course and get educated today at www.mywealth.com.
Hope you enjoyed that today. There's nothing I like better than getting a tip off to higher prices coming ahead, and so that I can get ahead of the curve and do something about it. And that's exactly what you and I can do today by buying the euro dollar, buying the Aussie dollar. Again, do your own analysis, see if you agree with my synopsis here. But if you do, get your account started today. If you don't understand the currency market, get in a course. You can do that at mywealth.com. Click on the courses tab. You can also scroll to the bottom of my written article today. There's some tabs, there's some links rather, that you can click on there to get started. But whatever you do, get educated today, get started in this amazing market, and save yourself from the inflation coming. Thanks so much. Bye-bye.